Hey, what's up, everybody? Welcome back to episode 29 of the Mainpod. And today we have a very special guest. Super excited to talk to him, get to know his story. Known him for a long time now, but haven't really dove deep into his story as a realtor here at Main Street. Welcome, Mr. Harry Hall.
Thank you, Julian. Appreciate you having me on.
Yeah, appreciate you coming in. This should be a pretty good one. I know you've helped me a lot since I've been at Main Street. I think I came in 2018, so we've known each other since then. And yeah, you've always been there to help any agent in our office with any questions that they have. So it's pretty neat and an asset. And glad that I got to get to know you. So let's get to know each other even further.
Sounds good.
So I guess let's just go ahead and start in the beginning. I always like to kind of just understand, how you got, or how long have you been a realtor, and how did you get into real estate in general?
I've been a full-time realtor since 2004, so 21 years. I started, August of 2004, but it kind of started before that. My father was a realtor in Las Vegas for 25 years, and he was a broker. And so at the time before I got into real estate, I was working for like Lowe's and Home Depot, like the big box stores, and just hated it. And started asking my dad questions about becoming a real estate agent like in 2002. And then he just broke it down to me and said, look, you have nothing to sell other than yourself. You don't have a home to sell. You don't have anything. The only thing you have is yourself and your personality. And you're going to help people do paperwork to buy and sell a home. So his big thing for me was treat every client like you would want your mom to be treated, with respect and love, and just to be with them through this entire process. You're kind of holding their hands. So I started looking into becoming a realtor in 2003, and then I decided to jump in and go through the principals class. And back then, that was before online classes, so you actually had to go someplace and take the class. That took 4 months, and then you had to pass that exam before you got your paperwork to actually apply for the state exam, which took another 6 to 8 months to get. So it was a good year and a half long process before I even got my license in August of 2004.
How old were you in 2004? Around that time?
When I got my license, I was 34. Just turned 34. So
okay. And so when you were doing the Home Depot and the Lowe's stuff, like, why did you feel like, because I know your dad was a realtor, but or in real estate, but for you, what was the draw to that part of it? Like, what made you make a decision? Like, you wanted to change something. Why did you want to change?
The biggest change for me was looking at the time to be able to take my kids to school in the morning, because my wife is a teacher. And so she had to leave at 7:00 in the morning. A lot of times when I was working for Home Depot or Lowe's, I had to be there at 6:00 in the morning or 8:00. And it wasn't beneficial for us to be able to, for one of us to take our kids to school unless they had a morning daycare, in which you didn't want to have to do that. So I was looking at being able to have a little bit more freedom as far as time wise in the morning and the afternoons to pick up my kids from school, and also to hopefully better myself financially, which I have done.
Yeah. Were you, because it's always unnerving. I don't want to say scary, but for a lot of people, it could be scary to go into something new, leaving something that you had been doing already. I know it was in your family, but like, were you nervous? Were you scared, wondering if you're gonna make it happen, or what was your thought process there?
Oh, absolutely. You're leaving a job where you get paid every 2 weeks to, you don't get paid until a home closes. And so I started in August of 2004, and I worked for Remax Legends. and had nothing, no leads, no anything. And about 3 months in, I was second guessing myself. And I finally got a lead. And my very first client, super sweet lady, Victoria Williams, never forget her. And I've helped her son buy a house since then. But I showed her over 200 homes before we got under contract.
Yeah.
And because I was a new agent, my split was a 65-35 split. So after all that time, my total check was $3,750.
Yeah.
And that, after 3 months plus escrow time, 4 months, it wasn't very much. And that first check was gone in minutes.
Before you got it.
Right, exactly.
Yeah.
Just to catch up on bills and all that stuff. So it was a definitely second guessing. But then after that, then I got 3 deals right away, closed in January of 2005, and was like, all right, this is what I'm going to do forever. So it's been good.
Yeah. So 2004, 2005, the market was cooking at the time. And then you get those 3 deals, you're thinking everything's great. I got this. And then shortly after that, the sky was falling. How did you navigate that, or what was that like back then? And I'm sure, for agents right now, I was just listening to Ryan Pineda today, and he was saying that, for the last 2 years, or he's been getting a lot of DMs from people leaving the industry, people that that are in real estate that are leaving, both investors, agents, all that kind of stuff. And he was saying even for his own business with his fix and flips and wholesaling, all that stuff, it's definitely been down. Transactions have been down like a lot from previous years and things like that. So, I know there's a lot of agents out there struggling to get through this time. You haven't gone through that, and now we're here. What was it like? What did you do? And then at the end, maybe speak to what we're going through now.
Sure. So 2005, 2006 were the first time ever in my career that I made 6 figures.
Mm.
And then you go from 2006, and then the crash happens 2007, go from 6 figures to $39,000.
Yeah.
You made that. So it was a tough adjustment, because when you start making that kind of money, you're expecting yourself to make that kind of money, right? So it was a big adjustment. And then 2008 was going similar. And then a mutual friend of ours, Karen Dazala, she had a BPO account, a broker price opinion account, and she was doing escrows and things like that. So she didn't have time throughout the day to go out and do photos and do these reports. So I started doing them for them. And here we are almost 20 years later, still doing them. I've done over 50,000 of these broker price opinions. They don't pay very much, but over, when you get several back then, just for Bank of America, I was averaging 300 broker price opinions a month. And you figure they were $50 a piece. That's 15 grand a month.
Mm-hmm.
That was a good chunk of money that was helping to pay the bills, and plus selling real estate and doing short sales and things like that. So now we're kind of coming full circle again after being in a seller's market since 2010. Some 15 years later, now the market's softening and people are getting out of the industry again. The broker price opinions are picking up again. So it's definitely coming full circle. It's just a longer time period than it had been previously, because the typical time period is 7 to 10 years, and we're on a 15-year cycle, which is unheard of.
Yeah. What just for those that don't know, that are in this space, why would a bank order a BPO, a bank property? What is it?
A broker price
Broker
opinion.
price opinion. Yeah. Why would they order that?
So the broker price opinion, it's like a mini appraisal.
Mm.
So the banks, instead of paying, $450 at that time for an appraiser to go out and do that, because there was so many properties that they were having to go through for short sales, foreclosures, even doing loan modifications, they would pay real estate agents to go out and give them what the current market value was. So we would have to give them 3 closed sales, 3 current properties on the market, and give them what our value was or what we thought the property would sell for. And we'd also have to let them know, is it a increasing market or a decreasing market, stable market? So they relied on our expertise and the local market of what's happening, because a lot of these banks are in the Midwest or on the East Coast, and or they're servicing companies that are in Colorado or whatever. They don't know Southern California, and they don't know Rancho Cucamonga or Upland, whatever city. So they would rely on our expertise to give them a valuation of what the property is worth, either going through a loan modification, a short sale, or ultimately going to foreclosure.
Yeah. So usually, if a property's getting a BPO on it, there's something going on, and the bank wants to just kind of check on the asset, see what the current value is to help them make a decision. So, like it's a notice of default, like they're missing some payments, they're going to do a loan modification, or they're going to refinance, or something like that. Something's happening with the house.
Absolutely. They could also, like a lot of times over the past couple of years, they could be getting a home equity line of credit.
Mm.
So they're just want to make sure that the banks, that there's actually equity in the property. And if you bought before 2011, 2021, 2022, and you've been there and you haven't pulled any equity out of the house, the equity's there. So, but they just want to make sure, because again, it's a bank. They're putting their money out there for an asset. So they want to know what's the current market value, what's happening in the market. So they're relying on real estate professionals to give them what's going on in the market and how they can foresee what the trends are.
Yeah. It's funny because when I met you, you were doing those, and I'm like, hey, what are you doing? And you explained it to me, and I've done a few, and it's, in short, they're basically turning an agent into an appraiser, almost, like, because you're still having to do a lot of the different things that they do on their appraisals. But you're the only person that I've talked to. We've had several people in here and talked that have gone through 2008, things like that, and they all did it through the REO sales and things like that. But you're the only one that went through it that way, which was pretty cool, because it's I'm sure it was a lot different back then, but you hear stories about the BPOs or the REOs, how long they take to get through, all the headaches that you had to go through to get them sold, and here you are probably making just as much, if not more, doing it with the BPOs. So it's kind of a cool little factoid, and you're still doing it today.
Back then it's a side business. It's part of the real estate business, but it's a side piece of the real estate business. I had REO business as well. I had several different accounts with different companies. And so a lot of times before you got REO listings or foreclosure listings, so people don't know what REO is, it's a bank owned property listing. Before you could get those, you had to do the broker price opinions for free for the banks. No guarantee you were going to get the foreclosure listings, but it was one of those things. The more you did and the higher score you got on your broker price opinions, the more likely you were to manage their properties for them well. One thing with a foreclosure properties is that once you got them, we as the agents were responsible for all the bills, like electric bill, gas bill, the water bill. We had to put all that stuff in our names and pay to keep the property maintained. We didn't have to pay a mortgage or anything like that, or the property taxes or HOA fees, but we had to pay the basics to keep the property, the lights on, the gas on, the water on. And so that was something that when you were wanting to become a foreclosure property listing agent, they asked you how much liquid assets you have, because you have to pay that stuff up front and then they reimburse you, but it could be 30, 60, 90 days for each property before you got reimbursed.
Wow.
So you had to have, they wanted on average anywhere from 25 to 50,000 that you had to have liquid asset cash money to be able to pay for these properties before they'd even assign you properties.
Jeez, that's crazy. I didn't know that part of it.
Yeah.
Yeah, that's pretty crazy. Um, so talk me through, like, so after that you were doing the BPOs, but then, obviously those died down after a while. I mean, they were still always present, but the number of them and the sheer volume of it probably died down. Um, and so most of your business throughout the years, what have you done, or what did you focus on, and what's that been like cutting out of that era?
So, majority of my business has come from repeat business. So I have clients that I met at an open house, and they asked me to help them buy their first investment property here in Rancho. And then from that, it went to selling their house in Covina and then buying a house in the colonies in Upland. And then they referred me to their family and friends. And within that family, over the past 18 years, I've helped them buy about 17 properties, buy and sell properties. And then, like my very first client, Victoria, I helped her son buy his first property here in Rancho Cucamonga. So it's a lot of my business comes from past clients, and they refer me family and friends, or, they're selling and either upselling or downselling, downsizing. And a lot of them are actually moving out of California.
Yeah, yeah. Would you say a majority of the houses that you've sold in the last 5 years have left California?
The majority of my clients have sold and moved out of state,
Yeah.
and it's just because they're getting at an age where they want to retire, or they have kids. I have a lot of clients where they had young kids and they want to get out of California, and they wanted to go where it's less expensive and more space, where it's less crowded, and just for a better lifestyle for their kids.
Yeah, yeah. Have you talked to, because you probably stay in touch with all your clients, right? Have the ones that have left, have you talked to them, followed up, and are they loving it that they left? Or are some of them thinking like, man, we messed up, we want to come back, or something like that? Anything like that?
Out of all my clients that have bought and moved out of state, I've only had one client where they sold. They moved to Arkansas, bought a house in Arkansas. They were there 6 months. They moved back. I helped them buy another house here. And within 4 months, I helped them put the house back on the market, the same house, and they moved to Texas.
I think you told me about that one. Is that the one? Was it in Upland? Is
Yes.
that the house? Yeah.
Yeah.
Yeah. That's crazy. That's
Yeah.
crazy. But why did they go? Why did they decide to leave again?
A big reason why they went back is because of their daughter graduated from college, and she was going to be moving back to Texas with her fiance,
Mhm.
and he already bought a house. And his family, his mom and sister, and all that is still in Texas. So they wanted to be closer to mom, who's getting older, will need some assistance, and they just wanted to be closer to family, and they didn't have anybody out here. Everybody else was already gone, left the state. So their biggest thing was getting close to their daughter and fiance and his mom.
Yeah. Um, Kind of backing up a little bit. So you started with Remax Legends. How long have you been at Main Street?
Been at Main Street now 10 years.
10 years. So you're 2 years longer than me. What brought you to Main Street? And I guess my question would be, why have you stayed here so long? Because a lot of agents nowadays, everybody's moving around. It seems like, I mean, people move for various reasons. Sometimes they think the grass is going to be greener. There's more to be offered over there. But my experience is, this is, you're self-employed. So if you're not doing well at a brokerage and you're leaving because you're not doing well, it's just look in the mirror, because you're not going to probably do well wherever you're going unless there's some sort of leadership there that's going to be hand holding, because it's really on you as the individual to make it work. You can make it work anywhere. But what brought you to Main Street, and why have you stayed for so long?
The biggest reason why I came to Main Street was, 10 years ago, they were the leaders in the industry on social media. And back then, it was, Giovanni was, head of the marketing department. And I met with Rick and Gio a couple of times before I left my previous office that I was at for 7 years. But their marketing was very antiquated. And I really liked what um, Main Street was doing. And so, a big reason why I've stayed for 10 years is because of the marketing, also because of the tools that Main Street has provided us, and they're second to none. And also escrow. I love the girls at escrow. They're phenomenal, Heidi and Nadine. They're just great to work with. Rick and Gio has given us the tools to succeed. And people who jump from agency to agency to agency, every time you leave, it takes you another 4 to 6 months to kind of build that brand, right? I've spent 10 years building my brand with Main Street Realtors. So if I left, that's going to hurt me in the short term because of now I'm having to rebrand with new colors, new, logos, all that stuff.
Mhm.
So a lot of times people that jump from agency to agency to agency, they don't do business because they're not giving themselves enough time to do business.
Yeah.
And like you said, if people aren't doing business, it's not the brokerage's fault. We're independent contractors. You have to put in the work and you have to make the calls and you have to, whatever your, legs of your business are, you're the one who's responsible for doing it, nobody else.
Yeah. Yeah. What do you so I know, like, I think there's a lot that's been changing in the market, I mean, in the real estate industry. Um you started, I think, in 2004. Things were quite a bit different, but I still think it was closer to now, because I know, like, in the early 90s they had an MLS book and things like that, but we were well established into the internet. But, like, with what's happening now with the lawsuit that was last year, the way they changed the structure of the commissions, um, like, what are your thoughts on that whole uh, lawsuit and the way that things are now?
I think on the lawsuit, I really didn't see that big of a change in business,
Mhm.
right? Even though we couldn't put in the multiple listing service, what we were offering for buyer's compensation. In all the transactions that I've completed since that happened, I've only had one buyer pay the agent commission fee. Otherwise, we've always asked the seller to continue to pay the agent concessions.
Mhm.
Um, and it's weird that it affected us here in California because our contracts, ever since I've started in 2004, when you took a listing agreement, say you took a listing at 6%, you put that you're going to take 3% for your office, and then it showed how much you're paying the other brokerage, right? So it was in the contract from the very beginning. I know back in Missouri where that lawsuit originated from, they didn't have that. So they took a listing at 6%. It just said 6%. It didn't say how much was being
Divi-
sent to the buyer's brokerage. So I think that was one of the things that I didn't understand why we got involved in that is because our contracts, the California Association of Realtors contract showed if you got a 6% listing and how much were you giving the buyer's agent, it was right there in black and white from the very beginning.
Yeah. Yeah. I mean, I feel like, in my opinion, that it's kind of, like you said, it was black and white, right? So you could see, the seller could see, other than the price of what it's actually going to sell for, they had certainty in knowing what the costs, the hard costs were, for the most part, on what that transaction was going to cost. So it was very, to be more transparent. Now, uh, when you meet with a seller, hey, this is what it's going to cost to sell your house, for me to help you do so, but we don't know what we're going to end up needing to pay for a buyer's agent or a buyer's agent brokerage, right? That part is going to be um, it's still gray. We don't know. We can't guarantee what's going to happen. Depends on the offer, depends on what they ask for, depends on all these other things. So it makes it much more fluid. Um, but at the same time, I think it's almost easier, or it's an easier conversation because, hey, this is what it's going to cost us. This is what you're going to get for that, to help you sell your house, and then we can negotiate the other half when that time comes. Um, but it did, to me, put some cloudiness, more cloudiness than there was even before.
I don't think it did for myself
Mhm.
because I had those conversations when I'm at the table with my clients. Because they would ask, what's this whole thing, the lawsuit, how does that affect me? And I would explain to them, that technically you don't have to buy or pay for the listing agent's compensation. You have to pay for the buyer's agent's compensation. But if you don't, then that's going to be one of those things that's going to hinder your sale of your home. So I always had those conversations that we were going to pay a buyer's agent's commission
Mhm.
just because of it's going to help you sell your home faster.
Why?
Why is it going to help sell the home faster? Because if you don't offer concessions, a lot of times the buyers don't have the extra money to pay their agents.
Mhm.
So, with most sellers, through the history of selling homes since the California Association of Realtors started back in the 1800s, it's always been the seller paying for the listing agent and the buyer's agent's commissions, and people are used to that. So it was easy to explain that it's really not changing, except for it's not in the contract, and we have to wait until we actually get an offer to see what they're asking for.
Mhm.
And now we're back at the negotiation table with the sales price, days on market, if they want a 30-day escrow, 45-day escrow, if it's, conventional FHA, VA financing. And now we got one more thing to negotiate is the concessions of commission, if they're asking for closing costs, rate buy downs, things like that. So it's now just one more step of the negotiations process that we didn't have before because you offered it in the MLS and now we can't.
Yeah. Do you, I think they saw that there was a new lawsuit. I don't even know why I brought it up because I don't remember what it was, but it had to do, oh, it was Zillow. That's what it was. So did you see the lawsuit that they're suing Zillow because the agents that are doing the flex programs, so if you're a Zillow agent, you're in the flex program, you give Zillow a portion of your uh, proceeds. So like, let's say you charge 3%, and let's say it was a $15,000 check, then you have 25 or 30% would go to Zillow, or 50%, and then you have your broker split. So by the time the agent gets paid, they're getting hardly anything, like $3,000 probably. And so the lawsuit stating that because of Zillow selling leads to these people at these costs, it's causing commissions to be artificially inflated because they don't want to give a discount because they can't get a discount, because if they give a discount, they're not going to make anything. So now they're suing Zillow over that. What are your thoughts on that?
I mean, if you're signing up for Zillow leads, right, and you're paying for the leads, that should be your cost. Whatever that cost is on a monthly basis, if it's $1,000, $5,000, whatever your cost is that you're paying for amount of leads, you're already paying them money. Even if you don't close the transaction with them, you're still paying them money.
Yeah, but I think the caveat is on the new program, the Flex, which is what they're going towards, like almost exclusively, is you don't pay until you close, and they get a percentage of what you close instead of paying for the leads up front like they used to do.
Right.
You don't pay anything. You get the leads, and then when you close it, you give them 50%.
Yeah, I'm sorry, I don't give 50% to anybody. That I work too hard. It costs too much money, especially listings. Right now, the average days on markets are climbing here in Rancho Cucamonga. The average days on market's about 40 days. Then you're at least another 30 to 40 days in escrow. So you're almost 3 months, if not longer, before you close a deal and get a paycheck. I work too hard. It costs too much money to advertise these properties on, um, Facebook and Instagram and doing any type of social media marketing, plus doing flyers and things like that. It costs a lot of money to do that. I'm not giving up 50% of my commission to a company for a lead.
Mhm.
I don't buy leads from Zillow for that exact reason, is because they're trying to get more money from the agents
Mhm.
than what they deserve. They have no skin in the game as far as costing them money, for advertising the property.
Yeah.
So if it was like a 15% or 10%, I can see it, but not 50.
Do you think that lawsuit has any validity, or is it like overstepping of or interfering in something that doesn't even need to be messed with?
I don't know. I mean, that's for the attorneys to, figure out. Just like with that lawsuit with the National Association of Realtors, it's funny how the lawsuit originated because they were saying that the realtor commissions were not negotiable. They've always been negotiable
Yeah.
from day one.
Yeah.
But the attorney's fees are not negotiable. They get 33 and a third percent, and their fees are not negotiable.
Yeah.
So it's funny how the hypocrites of the attorneys are suing the real estate companies, saying that our fees are not negotiable, which they've always been, but their fees are not.
Yeah.
So it's just kind of funny how that's been a big sticking point with attorneys, is that their fees are non-negotiable, but they're suing us, the little guy, for our fees, which are negotiable.
Yeah. 100%. If you guys, I mean, I agree with that 1000%. It's the biggest hypocrisy that I've seen in a long time, that these lawyers, just come out of the woodwork trying to find problems. I mean, granted, the thought is that they're trying to protect the consumer, but it's always been negotiable. It's always been, in my opinion, transparent. Can there be some people out there that maybe lie here and there on as far as agents? Yeah, but I think that's within the industry. But like you said, they're not negotiable. They're getting charged, or they're charging an arm and a leg, and they're doing it up front. I mean, technically, they probably don't get paid $33 billion, whatever that lawsuit was, up front, unless they win. Like, we don't get paid unless we sell your house, right? So that part's equal, but their cost is not negotiable. So I think it's pretty interesting, and they get paid millions to do it.
Yeah, and I think that what is crazy is that they continue to go after real estate agents and say that we're not on the part of the consumer, which I mean, of course, there are bad agents out there. Of course, I mean, there's bad people in every industry that you can think of. There's bad attorneys, there's bad doctors, there's bad, drivers, whatever.
Yeah.
There's always people that's going to try to take advantage and try to get the short dollars for free, right? So, but it comes back to them in a bad way when they get caught. Just like I saw today that there was some people from Texas that are going to prison now for 15 years because of the wildfire scams that they did from the Pacific Palisades and the Eaton fires. They got caught. They set up a bogus what's the word I'm looking for? Company.
Yeah.
And they took in millions of dollars that was supposed to help these people that lost their homes in the Eaton fires and Pacific Palisades. Well, they took all this money and they kept it for themselves. Well, now they're going to prison for 15 years. So, yeah, you can always do it the fast and cheating way,
Yeah.
but you're going to get caught. It may take a year, it may take 5 years,
Yeah.
but eventually they're going to catch you and they're going to put you away. And it's not, to me, it's not worth, I don't want to go to prison.
Yeah. I don't want to go to prison either. What do you think? What do you think is going to happen next year with real estate? More of the same? Improvement? What are your thoughts?
I think because of how the market is currently and how the jobs and the economy is slowing down, they've already lowered the interest rates by a quarter point in September. If the economy continues to slow down as it is now, the only way to boost the economy would be to lower the interest rates. Because as the housing market goes, the economy goes. With every job or with every house that sells, it creates 3 new jobs on average. You know, plumbers, painters, and carpet people, and gardeners. Those are the top 4 jobs that are created with every house that sells. So if the market or the economy continues to slow down, I think they're going to have to continue to lower the interest rates so that it does give it a boost. With that, I think that we're going to see maybe a slight uptake in home prices and home values. It's not going to be the 10 to 12% that we've been seeing. We might see a modest 1 to 3%, or it could even flatten out. It just all depends on the interest rates because that's going to be the driving factor.
Yeah. I think the biggest part that, I mean, it's crazy to think that where the prices are, especially here in Southern California. But, like I always tell people, like, prices can't stay here. But I always tell them, like, look at Northern California. They've been high and they've stayed high. That said, it would suck to see them go up even more for the people that are trying to get in and get a house, be the first time home buyers, things like that, because it is expensive. But we do need some volume. But I don't know how you get volume of sales and not have price increase, or have it be stable, but that would be my biggest concern. But we'll see how it goes.
I think you could have volume and still have a stable real estate market, but we got to get volume.
Yeah.
And that's the thing, is that since 2010, it's always been less homes available than buyers.
Mm-hmm.
And now for the first time in 2025, we're starting to see more inventory where buyers have more choices. So once we get over that 6 month of inventory, that, typically starts the buyer's market. And that's where we're going to start seeing the market slow down a little bit and longer days on market. And where buyers, even right now, buyers are able to ask for concessions and closing costs. And sellers, if they're serious about selling and they want to sell, they're doing that.
Yeah.
So I think if we do get more volume of homes, it'll stabilize the market, and it may even, the home values come down a little bit. They're not going to come down, 30, 40, 50%. That's just not going to happen unless we have a major economy crash. So we can still continue to have, a stable 0 to 3% increase, next year.
Yeah. Yeah. I think that's true. I think it's, I think that the current market, because we're only four months right around there right now. Is that what you're saying?
Depending on the cities, but like on average, the average days on market here in Rancho Cucamonga is about 40 days on the market.
Mm-hmm.
Upland, we're about 36. Fontana, we're about 45. Ontario, you're about 43. So that's pretty local. You go to up to Victorville and Phelan, those areas, the average days on market's 300 days. So it's almost a year for an average home in those areas before they sell.
Yeah.
So, we don't have that type of market down here right now, but it's still, it's not the 7 to 14 days that we were used to over the last, since COVID, since 2019, homes would sell under 2 weeks and you'd have 30 offers.
Yeah.
Now it's, if you sell in 45 days and you get one offer, you're pretty excited.
Yeah, yeah, yeah. All right. Well, do you have anything that you want to leave for the audience? Any wisdom, thoughts, anything like that?
Sure. I think one of the biggest things, if you're looking to sell your home, um, most people put the most amount of money into their home the year that they buy it and the year before they sell it. And it's important because say you've been in your house for 12 years and you painted it 12 years ago. Well, it needs a fresh coat of paint, inside, outside. You got to make sure that your house is ready to go on the market because buyers are very particular and they're really picky right now because there's more inventory now than we've had. So you need to make sure it's clean. The window sills are clean, the windows are clean, the floors are clean. And it sounds, simple stuff, but it's getting your house for sale and getting it ready. Clean the blinds, replace the blinds. If they've been there for 12 years and you've been there 12 years and they were there for 5 years before you, it's time to replace the blinds. Replace the carpet. It's that's part of home maintenance, is replacing carpet, painting, things like that. Curb appeal. You only get one chance to make a good first impression. And if you have dead lawn and weeds and ugly bushes and things like that, people are going to think that the impression from the outside is also going to be the impression on the inside.
Mhm.
So you got to make the outside look beautiful as much as the inside.
Yeah, 100% agree. I know what mine is, but what's the number one thing that you see sellers do wrong on? Not that they're doing wrong, but maybe they just don't know or don't care. I don't know. But like the biggest thing on curb appeal that can really help that house sell or give a good first impression
What's the number one thing?
that a seller could do to help that whole process?
I think one is having a green lawn. Having a dead lawn. That's, I know water's expensive. I get it 100%. But if you start watering that lawn 1 or 2 days a week, 30 to 45 days before you put it on the market, it's going to be green. Fresh flowers are important. But one thing that I think hurts sellers is putting in the bark, because bark is a termite. It's a feeding ground for termites. So I don't think bark is good. It looks good for a short period of time, but it's not. I don't think it's good for sellers to spend that money on.
Yeah, yeah. I always my whole thing is like, because you touched on it already like a little bit, but like when you're getting a house ready, it's easy to spend money, right? It's easy to paint. It's easy to put flowers in, all those things. But what's even easier and cheaper than that is cleaning the house.
Oh,
The
absolutely.
details, right? Like you walk up to the front of the house, there's cobwebs. It's as simple as hosing down your house, scrubbing the doors, doing that stuff. But beyond the cleaning up of the outside, taking care of all the weeds, even if the grass is not the greenest or whatever, the planters are clean. That all makes a huge difference, because I've gone to so many houses and it's like you walk up to the front door, it's just covered in dirt. There's stuff around, and if they can't clean it, well, I mean, clearly they're probably not going to do a lot of other stuff to that house. So to me, it's probably just that aspect of it, and then paint would be the other one. Beyond that, kind of gets a gray area as far as return on investment and things like that. But those two things, 100%.
Absolutely. I think simple, just hosing down the house and getting rid of all the spider webs and the dust and the dirt. And then after you rinse down the stucco of the house or the wood or, whatever it is, then you wash the windows, you clean the windows. It doesn't take but 10 minutes, maybe an hour to wash all the windows. Get a squeegee, a bucket of soap, water, some paper towels, and do the windows. Because it's people have, when they walk up to a house, and I've done it, when you walk up and there's a ton of spider webs and, you know, the wasp nest and things like that and the eaves are up at the front door. It's like, if it's like this on the outside, what am I looking for on the inside? That's not going to be clean, you know? So it's, um, so yeah, I think, you know, having the house prepared before photos and things like that, before going on the market is important. And then I'll switch over to buyers. Um, Buyers need to get pre-qualified
Yeah.
before they start looking, because once you're pre-qualified, now you have an open checkbook of what you can afford. A lot of times you pre-qualify and you can pre-qualify for a lot more than what your monthly budget, what you want it to be. So say if you qualify for 1 million, but your monthly payment is most comfortable at 800,000, then look at homes at 800,000 and below, or 825 and below. But if you're looking at 825, then you want to look at homes that have been on the market for 30 to 45 or longer on the market, because then there's some room for negotiation.
Yeah.
If it's been on the market for 1 day or a week, they're not going to negotiate. So you have to first get pre-approved, get pre-qualified, make sure that you know what your budget is and what you're comfortable with. And then you start looking, contact an agent and then have them start sending you properties. And that way you can start building a rapport and be honest with what you're looking for. Would you rather, you know, have a 4-bedroom, 2-bath house in Upland that, that's smaller for 800,000, or do you want to go to like somewhere like Fontana or Rialto where you can get a 3,000 square foot house that's 4 or 5 bedrooms, but you're going to have a longer commute? So you got to figure out, where do you want to be and what's more important to you? Do you want, a smaller, cooler, older house, or do you want something larger and newer?
Mhm.
So, figuring that out, and you have to know what is going to work for you. And you have to have negotiables and non-negotiables,
Yeah.
because you're not going to get everything. Even if you build your own house from scratch, you're always going to say, I wish I would have done XYZ, right? Or made this room bigger, or made an extra bedroom, or whatever. So there's always going to be a compromise when you're buying a house.
Yeah, 100%. I think too, the one of the biggest reasons to, soon as you guys are starting to talk about, because I think, I don't know why, I don't know what it is. Maybe it feels like it's more of a commitment of some sort. But whenever somebody's thinking about buying a house and they're talking it over and they're starting to plan for that, it seems like almost the last thing that they want to do is talk to the lender, and that's like their last step before they feel like they're ready to buy the house or put an offer in on a house. But what the reality is that should be the very first thing that you do, because like you said, you want to know what it is that you actually can afford. But on the off chance, and many chances, you can afford more, but sometimes there's things that you can do that you didn't even know, or something's on your credit or on your history that you didn't know that's going to affect you. So now let's say you're talking to your person, and you guys are like, hey, let's buy next June, let's buy the house. And then come April, and this is June the year before, come April, you start talking to the lender, and then you realize, oh wait, we've got to do X, Y, and Z, and now we can't even buy until December because it's going to take us that long to fix that one thing that we put off trying to talk to this lender about. And I don't know what that is, that the fear of talking to a lender. But a good lender is not going to pressure you. They're not going to make you feel anything. They're just really there to help you understand your current scope of situation and what you can and can't do, and what things you can tweak and maneuver to help you be in the best position possible, get the best rate, save you money, all that good stuff long term.
Well, and also too, you got to look at your lender as your partner, just like your real estate agent. We're a team effort. So if you're looking to buy next June, and so you got 8 months to figure out, that time frame, when maybe you need to save money, or maybe you have something on your credit that needs to be addressed, and it's going to take 6 months to, get that taken care of. And also too, when you're talking with your lender partner, you also have to look at your insurance, because homeowners insurance is going up right now, and especially in areas that are local to the mountains or local burn areas. So, you got to talk with your insurance agent. There's a lot of people that need to be involved with these conversations, um, so that you know what your monthly payment's going to be. Property taxes are going up too. As property values rise, property taxes go up. So there's a lot of factors, and your lender partner can help you, and your real estate agent can help you, figure out that cost. Because we as the agents can look up on the tax roll to see what the actual property taxes are and if there's special assessments, and then your uh, insurance agents can run a property search on that property, because if it's had insurance claims in the last 5 years, then it's going to make your insurance higher than if there was no insurance claims on that property in the
Yeah.
last 5 years. And then your lender can figure out, okay, if you're looking at a property at 800,000 and you're going to do conventional, are you going to do a 3%, 5%, 10%, 20%? How much money do you need to save? And not just for your down payment, but also closing costs. So there's a lot of things there that need to be discussed prior to you actually, going and looking at properties.
Yeah. Yeah. Well, I think we're almost an hour in. So I think it's a good spot to end it.
Okay.
That stupid camera keeps cutting out. So, but I appreciate you coming in, Harry.
Absolutely.
Thanks for sharing all your knowledge. And yeah, if they want to go find you, what's your Instagram?
Harry J Hall, and then the number 3 on, Instagram.
Harry J Hall, number 3. On Instagram, you can find Mr. Harry Hall, and I'm sure just go on Facebook and type in Harry Hall.
Harry Hall Realtor.
Yeah.
Or Harry J Hall on regular Facebook, on LinkedIn, Twitter, all the social media.
Yeah. Can I guess your middle? Is it Joseph?
It is.
Yeah.
And I'm the third. So yeah. So but yeah, or you can always shoot me a DM through all 3 of the platforms, or on YouTube. You can shoot me a message through YouTube as well.
Yes, sounds good. All right, guys, I appreciate you stopping by for another episode of the Mainpod, and we will see you next week. Esther will be back. She had something come up this week, so we will see you next week. Appreciate you guys tuning in.